Hello everyone. Welcome to the Stock Minds web channel. Celsius Holdings, Nasdaq CELH, has turned heads with its Q2 2025 earnings report. The company posted strong top-line growth and beat expectations in several respects, prompting renewed investor interest. While some valuation metrics appear rich, the fundamentals, especially revenue growth driven by acquisitions and brand expansion, make a compelling case. In this video, we will dive into Celsius' recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Celsius Holdings. Founded in 2004, Celsius has grown from a niche fitness or health-oriented drink company into a larger player in the U.S. RTD, ready-to-drink, energy or functional beverage category. Its portfolio includes Celsius energy drinks, Celsius Hydration, and Alani Nu, a health and wellness brand acquired earlier in 2025. These products are positioned in the better-for-you functional energy or beverage space, focusing on zero or low sugar, added benefits, and flavor innovations. The company leverages modern distribution channels, innovation, wellness trends, and its acquisition strategy to broaden its footprint. Celsius financial performance. In the second quarter of 2025, Celsius Holdings delivered outstanding top-line growth, with revenue reaching $739.26 million, an 83.91% increase compared to $401.98 million in Q2 2024. Quarterly earnings per share (EPS) rose to 33 cents, up 17.28% from 28 cents a year earlier. On a trailing 12-month TTM basis, revenue climbed 11.85% to $1.66 billion from $1.49 billion, while TTM EPS fell sharply by 61.23% to 39 cents versus $1.02 last year, reflecting acquisition-related costs and other expenses. Free cash flow per share (TTM) also slipped 16.35% to 87 cents from $1.04. Profitability metrics remain solid, with a gross profit margin at 50.53%, net profit margin at 7.91%, and free cash flow margin at 12.65%, supported by return on assets of 3.06%, return on equity of 7.91%, and a conservative debt-to-equity ratio of 0.43. Over the past 5 years, Celsius has been growing revenue at 76.1% CAGR, net income at 71.3%, and free cash flow at 160.9%. Celsius has been growing consistently in the past and still projected to grow rapidly in the future. Celsius Fiscal 2025 Financial Forecast. Looking ahead, Wall Street analysts forecast 2025 revenue of $2.43 billion, representing a 78.99% jump over 2024's $1.36 billion, and project EPS of $1, a robust 122.83% increase from 2024's 45 cents. Wall Street analyst maintains a buy rating, with an average price target of $66.55 representing potential 18.12% upside and the highest price target of $80, implying potential upside of 42.02% from current levels. CELH Stock Price Performance and Valuation. At the time this video was created, the stock was trading at $56.34 per share. Celsius Holdings stock has delivered remarkable returns, surging 61.9% over the past year, far outpacing the S&P 500's 17% gain in the same period. Over the last 5 years, the stock's performance is even more striking, climbing 671% compared with the S&P 500's 99.3% increase. Despite these strong gains, valuation metrics suggest the growth story remains compelling. The company trades at a price-to-sales (PS) ratio of 7.97 on a trailing basis and a more attractive forward PS of 5.88. Its price-to-earnings (PE) ratio (TTM) stands at 140.04, but drops significantly to a forward PE of 55.12. While the price-to-free cash flow (PFCF) ratio is also elevated at 68.9. Based on Fiscal.ai data, if we look at the valuation since 2023, the forward PS, forward PE, and PFCF are below the average. Although the valuation may seem high, it is justifiable as Celsius Holdings' business is still projected to grow rapidly in the future. Celsius Holdings' growth potential. Celsius' growth prospect remains strong, driven by several factors. 1. Strategic acquisition integration and portfolio expansion. Celsius Holdings' acquisition of Alani Nu on April 1, 2025, transformed the company into a diversified functional beverage leader with significant growth opportunities. Alani Nu contributed $301.2 million in Q2 2025 revenue, showing immediate financial benefits. The brand posted an impressive 129% year-over-year retail growth and captured a 6.3% market share, becoming the fastest-growing, ready-to-drink energy brand in tracked U.S. channels. Together, the combined portfolio now ranks as the third-largest energy drink group in the U.S., holding a 17.3% market share, up 180 basis points from last year. This acquisition broadens Celsius' consumer base, especially attracting more female customers where Alani Nu excels. Operational synergies and cross-selling across distribution channels have strengthened the company. Successful new limited edition flavors like Sherbet Swirl and Cotton Candy showcase strong innovation and consumer engagement capabilities. 2. Market leadership and high-growth functional beverage category. Celsius Holdings has established dominant market leadership in the rapidly expanding functional beverage segment, positioning the company for sustained long-term growth. The company contributed 24.5% of all energy drink category growth in the first half of 2025, significantly outpacing competitors and driving overall category expansion. With $4 billion in past 52-week tracked retail sales as of July 2025, Celsius Holdings' portfolio generates more revenue than the next 8 energy drink brands combined. The Celsius brand maintained its #1 position among zero-sugar energy drinks while achieving 3% year-over-year retail sales growth despite challenging comparisons. The company's focus on functional, zero-sugar formulations aligns perfectly with consumer health and wellness trends, particularly among millennials and Gen Z demographics who prioritize better-for-you beverage options. This market positioning provides sustainable competitive advantages and pricing power in premium segments with higher margins and consumer loyalty. 3. Extensive distribution network and geographic expansion opportunities. Celsius Holdings boasts one of the most extensive distribution networks in the functional beverage sector, supporting its growth through market penetration and geographic expansion. It achieves 99.3% ACV distribution across more than 240,000 U.S. retail outlets, ensuring vast consumer access. Its strategic partnership with PepsiCo enhances distribution infrastructure and logistics, accelerating market expansion and operational efficiency. International sales grew 27% year-over-year to $24.8 million in Q2 2025, showing progress in markets like Canada, the UK, and Australia. Celsius's direct store delivery DSD system, involving over 135 regional partners, improves shelf presence, reduces out-of-stock instances, and elevates customer service. This robust distribution capability sets high entry barriers for competitors while enabling Celsius to leverage emerging market opportunities and adapt to shifting consumer demand across various retail channels. Risks to consider. While Celsius' growth prospect is strong, we should be mindful of potential risks. 1. Revenue and profitability pressure. Celsius Holdings faced a 7% year-over-year revenue decline in Q1 2025, reaching $329.3 million, mainly due to changes in the U.S. distributor incentive program and retail promotional spending. North American sales fell 10%, while international revenue grew 41%. Increased promotional costs and acquisition-related expenses, along with a larger global workforce, pressured near-term profitability and cash flow despite gross margin improvements. This reflects a challenging but transitional period. 2. Competitive beverage market. Celsius operates in the highly competitive energy drink and functional beverage market, ranking as the third largest U.S. player, with a 16.2% market share as of Q1 2025. The company faces strong competition from giants like Monster and Red Bull. Consumer preferences shifting toward health-conscious, low-sugar, functional beverages create both opportunities and challenges, potentially affecting Celsius's market share and sales growth amid evolving industry trends. 3. Regulatory and compliance challenges. Celsius Holdings has faced significant regulatory and legal challenges, including an SEC investigation into improper accounting and disclosure control failures from 2019 to 2023. The SEC charged Celsius with violations related to stock-based compensation accounting, resulting in a $3 million settlement. Additionally, the company faces multiple shareholder lawsuits alleging false and misleading statements regarding inventory and sales outlook, creating potential legal and operational risks that could impact its financial stability. Conclusion: Celsius Holdings Q2 2025 results underscore its powerful growth trajectory, driven by soaring revenue, expanding market share, and the successful integration of Alani Nu. While trailing earnings and free cash flow dipped, forward estimates point to sharp gains in both revenue and EPS, supporting the company's premium valuation. With strong margins, manageable debt, and continued international expansion, Celsius remains well-positioned for long-term growth. Despite high multiples and integration risks, the stock's robust fundamentals and analyst upside potential make Celsius a compelling buy for growth-oriented investors. But remember, this is not a financial advice. What do you think about Celsius? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.